Welcome back, guys. Johnny here, and I got another exciting video for you today. Today, we are going to take a deep dive into VYNE Therapeutics Inc. I have not done an update video on this in a while, and I feel like now is the time to do it. So, this video is going to show you some inside details of VYNE Therapeutics Inc. or VYNE stock, ticker symbol VYNE. I'm going to go over the street rating, one of my favorite places to go for long-term analysis and some technical analysis. We're gonna go over Yahoo Finance and look over there, and then we're gonna go to Webull, look at the charts. So we're gonna look at the fundamentals, the technicals, and look into a little more detail on VYNE Therapeutics Inc. So if you like these kind of videos, don't forget to subscribe to my channel and smash the like button right now. Go ahead, smash it. Thank you. All right, so guys, I like the street rating because it shows accurate information and it's frequently updated, and they track thousands and thousands of companies. So this one is from August 15th, 2 days ago from when this video is going to release. The street quant rating says that it's a D-. It is a sell. That is really bad. Why? Well, a few things that we can go into is, first off, it's not all bad, right? There has been some insiders, and we'll get into that in a minute, where let's just get into it right now, actually, since we're already here. There has been some actions about the insiders. Come on, where's the news? Right here. So, Prospective Advisor LLC, 10% owner, sold 250,000 shares of VYNE Inc. On August 13th. Also, I believe there was over 9 more. Yeah, there have been 9 inside transactions reported to the SEC for VYNE Therapeutics. Now, what that means is they unloaded over 731,000 shares, and that is what created this huge fall right here. This was today. Well, starting from the 11th all the way until today, it has dropped, I believe, 64%. Something insane like that. So what does that mean for the future? Well, I went over some of the details on here and did some of the highlights. Usually they'll have a target price rating here, which we're going to talk about. I've heard people say as low as $3 to an average of $9 to as high as $15 now. Now, a year ago, they were saying it could be as high as $40 per share. I actually loaded up on some shares too, and we can go into that at the end of the video. I got some screenshots showing how many new shares I picked up at what price and what my new average is. So if you want to look at that, check that out too. So on the sell side of things from the street, they're saying that it has disappointing return on equity and generally just a disappointing historical performance in the stock itself over the last year. Return on equity has greatly decreased, and the net result is that it's down by 68%, and that is just insane for it to be down that much. I know there's a lot of people here holding the bag. They're down, 50-60% of this position, and I could say to you guys is to hold out. I mean, there's not much you can do right now unless you take a major loss. Wait for it to go down. I've heard talk about 50 cents, $1. Load up as much as you can at that point, average down, and then you're able to then sell out, at least break even, get your money back. That's kind of my process that I'm going to be doing. So moving on, gross profit margin is currently very high, coming in at 86%, which is amazing. But VYNE's net profit margin is actually negative 498%, which is nuts, right? But VYNE Therapeutics Inc. reported poor results of a negative 980 per share versus 652 in the prior year. Now, this year, the market expects an improvement in earnings from this $9.80, this negative 980, to only a negative 133. So if they can float, which they can because they have a ridiculous market cap, right? We can go over that. $102 million market cap, so they have expendable money. Then the following year, then maybe they can get into a more profitable earnings per share. But for right now, the net income also increased by 48%. So they went from having a negative 40 million the prior year to only a negative 20 million. And yes, we are still talking about negative numbers. Guys, I'm not in any way trying to promote this to you or make you buy this company. I am simply just sharing information with you that I have found. Now, saying that, I normally will not invest in companies with negative earnings per shares showing a overall downward trend over time. Never. But I did take a risk on this company. I still have some faith in this company, and I believe there's a potential to still be able to, again, average down and even break even at the end of the day. Now, as far as this goes, there's not much more to show you on the street besides the factor ratings, stock at a glance. Now, as far as total return, efficiency, price volatility, solvency, and income, they all are at a half a star, which is just horrible when the street rates it, which is why it got a sell rating. But as far as growth goes, they got a 3 out of 5 stars, and this measures the growth of both the company's income statement and their cash flow. On this factor, VYNE has a growth score between better than 50% of stocks that they rate. So that is good. Let's just see if they can hold out, right? So moving along, we're going to go to Yahoo VYNE. Now we're going to get into a little bit of some news and some more of the charts. As we can see, a new updated market cap of 84 million. Earnings per share is actually a negative 1.91. That's what Yahoo's saying right now. And first target estimate, $9. Now, why do I find this interesting? Well, because, what happened to my internet? Here we go, loading. Sorry about that, everybody. Sorry about that. I went into the actual chart. Don't know how I did that. Okay. So, going down here, as you can see, the earnings per share was right on, pretty much, right? For Q1 2021, their estimated was negative 41, and they beat it. Only a negative 37 cents earnings per share. Well, their financials definitely don't look the greatest, but see, their earnings is, well, far less than what they have, but their revenues are up by 20 million. So again, this is something to look at and to really just try to understand. They only have 2 ratings right now, and they're saying they're 2 buy ratings with VYNE, 1 sell rating from the street. Again, here we go. Current is $1.65 a share, guys. Like, what if this did go to 50 cents? Well, then you buy more, and you buy more, and you buy more, and you average all the way down, which we're going to talk to in just a second. The low is $3, the average is $9, and the high is $15. Now, we're done with that. On Webull here, I wanted to show you one more thing, okay, before we go to my screenshots and show you how much money I put on this company. What I wanted to show you was where is it? Right here. Okay. So buy 100% from 7 analysts on Webull right now, right? Low is a $3, $9, and $15 is the high for your analysis price target, right? It's finally coming to a bottom. I really strongly believe that this thing is going to finally bottom out. As you can see on the MACD, it's extremely oversold. On the RSI, it is extremely oversold, right? It's time to do a slight bounce up And I'm kind of going off past history here too, but I'm thinking it's going to dip a little and then it's going to go up, right? Day chart. Okay, so every downtrend we've had, it's gone up slightly, right? And then it bounced back, right? It's gone up a little bit, back up to $30, which is nuts to me, right? That it was even at $30. And then it had to split, right? Okay, and then it went down, and then it kind of just went steady for a while. It looks like for a few months. July all the way to January, it just kind of flatlined there around $6. And then it had the stock split, ran all the way up. People got a lot of hype in February, and went all the way up. People sold, they got out. Some of the bigger institutional holders. Major sell-off after the huge dip. And then now I've been tracking, it's been slightly going up, down, up, down, up, down. But this is definitely a downward trend. Definitely a downward trend. But now it's to the point where, I mean, there's not much left you can do. The revenues were $4.26 million for the first quarter. They made some money. Now what do they do with it, right? So it could happen two ways. It could either go all the way down, say it goes all the way down to 50 cents. Like it hit $1. That's still 42% down. Goes down to a nickel. It's 44% loss, right? But what if it goes up? What if it goes up, right? What if it goes up to that, $3 mark? That's a 74% profit if you were to buy in now or average down to get it that low. If we were able to get it up, to the $9 mark that they're saying that it could possibly get to, that's 466% profit, right? And leading up to that, since you guys can already see how many shares I have, let's go ahead and look at that. So shares, so what was it, yesterday? I believe it was yesterday. I had 96 shares at $6.74. You can see it right here, $6.74. That was my average on 96 shares. So I have quite a bit of cash in on this company right now. You could join our Investing for Beginners Facebook group. Go check it out. On Facebook, you could literally just type in Investing for Beginners, and I am the first one that pops up. We have 20,000 members, and we are growing very rapidly. Join the conversation, get involved, and let's talk about stocks, real estate, side hustles, and other ways that we can make more money using your hard-earned money. I don't ask for any payments, handouts. I don't try to sell you anything. It is all free, 100% free education. So, moving on. Sorry for that. I actually misclicked the arrow. So, limit order of 177, okay, at 100 shares. Say the date on here. It doesn't say the date, but I just did it like yesterday. I swear I did. Okay, estimated amount 177. Okay, great. Put it in. Okay, right here. Yep, 816. So 816, I bought this at 10 o'clock in the morning. Average fill price was at $1.76. 100 shares I bought, and I was able to fill that. Now, with those added 100 shares, it actually brought my average down substantially. It brought it down from, what was it, 674 to 420. So I went from $6.74, which it could take a long time to get the company back to that number. I bought 100 shares at $1.76, and I was able to average from $6.75. It was almost $7, guys, all the way down to $4.20. So now I wait. I'm going to check and see if it goes down more. And if it goes down more, then I'm going to buy more, right? My average price right now is $420. Total cost $823 with only a market value of $335. That's 50% loss right now. Before I did this, I should have took a picture because I believe it was at like a 68% loss. So just by averaging down and putting more money into the game and just not having to have such a high average share price, I was able to reduce 18% of my debt position ratio, 18% of that, um, easily. Like it was amazing. So, um, anyways, so yeah, we're at $4.20. When it goes down to $1.50, $1.50, whatever it is, I'm gonna buy more and get that average down to, heck, get it down to the $1.76, cash out, and have $1,400. That's, maybe I have to put in another 400 or 500 to get it averaged down. Averaging down is a risk. You definitely don't want to do it if you don't believe in the company, and never invest money that you cannot lose. Don't go put your rent into an investment account and then you lose it. Can't pay rent now. Be smart about your money. Only invest what you're willing to lose, and always willing to try to never lose any. I mean, that's the thing, right? If you like this video, guys, again, smash that like button, leave a comment, share it with a friend, and let's go. Hashtag VYNE Therapeutics, new hashtag investing for beginners, or IFB. So look for that hashtag wherever you go, and that way you know it is authentic from. All right, guys, signing off. Have a great day.